Welcome back. Well, let's cross over now to the FMDQ marketplace for update on the fixed income market. Bankole Odusanya joins me now. Good morning, Bankole. Thank you for coming through to us.
Good morning, Chimezie.
So the fixed income market seems to be relatively quiet. There has not been any OMO auction this week and last week. Why?
The major driver of our fixed income market, especially on the short end, the treasury bill market, is liquidity. And since June 3rd and 6th, we have not seen any OMO issuance. The central bank will usually gauge system liquidity and then manage the amount of liquidity we have in system by issuing OMO treasury bills to mop up these funds. We've not had excessive system liquidity this month, and it's very, very reminiscent of what happened in April, where we had just 3 OMO maturities all month. May was quite liquid, and we saw more of such issuances, which helped to stimulate the T-bill market. But right now, because we've not had so much issuance, there's more demand than supply. And so activities ranging from the 200-day treasury bills and on the 360, and that's the long-term end of the treasury bills curve. We have seen yield drop to 12% at the primary auction that was held this week. And we have seen in the secondary market trades done at 11.9 levels for 1-year bills. So we have seen a gradual decline in discounts simply because of this shortage in supply.
Okay, so, I mean, today is the final trading day for the week. Could you wrap up the week for us and, of course, give us an outlook on what next week would look like?
Okay, next week we expect some funds. This is coming from June 29th, 2019 maturity of a bond. About 350 billion will be coming in with the accompanying coupon payment, the last coupon on that particular bond. Some of those funds will be reinvested into that same asset class. So we expect those funds to stimulate the activities of the bond market. The bond market has been quite inactive, simply because of what's happening generally to our capital markets, not just the equities market. The long-term debt market has been quiet as we await, direction for the country. When the cabinet comes in, the economic team sets an agenda, and then everybody will be able to fit into the plan, even on the supply end and then demand end of securities. But going into next week, we expect federal allocations also, and maturity of about 100 billion from treasury bills. All those funds would help kickstart going into next month. We expect the central bank to issue some OMO bills to manage the amount in circulation. And then this is expected, this is usually what usually happens when OMO comes is that the rate is usually slightly higher than secondary market. And then the secondary market kind of finds its level again, tending towards the OMO stop rate. So basically we'll see some reversals from 11.9, from 12%. We'll see usually reversals tending back to 12.2, 12.3 basically. That's what we expect next week.
All right. Thank you, Bankole, for your time. Bankole Odusanya is the head fixed income at UBA Group. Well, a quick recap of those activities there at the fixed income market. Of course, we saw the Treasury bill segment bullish, with yield moderating by 3 basis points to 12.40%. Demand was spread across the short, mid, and long segments, with respective yield on the 63-day to maturity, 112-day to maturity, and 357-day to maturity bills contracting. We saw the overnight lending rate contracting by 250 basis points to 5%. Okay, it's the morning after the Bank of England left its benchmark interest rates unchanged. Let's see how the London markets are waking up to this morning. My colleague out there in London, Simon, will tell us more. Good morning, Simon. Well, Mark Carney and his monetary policy team did not only leave the rate unchanged yesterday, the bank cuts UK growth outlook. How is Carney's speech being digested this morning after?
Yeah, morning, Chimmy. This is the most likely Mark Carney's final speech as head of the Bank of England. And as you say, he and his team slashed the growth forecast for the 3 months to June to 0 from 0.2%. It's due to all the things we've been talking about for weeks, really, a deterioration in the economy, and the pound since Theresa May extended the Brexit deadline until the autumn. They said companies big up and small up and down the UK expect uncertainty to continue while there were no clear signs that firms would increase investments in Britain. The most worrying thing right now for the UK economy, according to Mark Carney, is the potential of a no-deal Brexit. And Boris Johnson, the front-runner for Prime Minister and the Tory leadership, is, of course, an advocate for potentially going for no deal. Well, in the last few minutes, Mark Carney has said that the UK would be hit automatically by tariffs on exports to the EU in a no-deal Brexit, and that's a rejection of a claim made by Boris that this could be avoided. It's no secret the two don't see eye to eye on a lot of economic and business issues. The bank's governor has been an outspoken critic of Britain leaving the EU without a deal. However, Johnson has repeatedly said the UK must leave on the 31st of October, whether a deal is agreed or not. Carney said today that as many as 150,000 British businesses did not have the paperwork in place to export to the EU in the event of a no-deal Brexit. Anyway, the high probability is those two men will probably have to work together in the future for a few months at least. Mark Carney leaves his post in January, and Boris Johnson is the heavy favourite to replace Theresa May as the UK Prime Minister. But in general, Chimmy, no real surprises about yesterday's announcement, and that was seen in the markets, which were slightly up, the pound dipping slightly and then recovering.
Okay, now Mark Carney also gave Facebook's proposed digital currency Libra a cautious welcome. Was that an expected welcome?
Yeah, quite unexpected, actually, this announcement, Chimmy. The bank has said it would be open to allowing tech companies access to the bank for the first time, letting them offer payment systems on a level playing field with commercial banks, allowing all payment providers to store funds overnight in interest-bearing accounts at the central bank would help achieve the goal that similar activities should be regulated consistently, according to the Bank of England. Speaking at the annual Mansion House dinner, which was interrupted at one stage last night by climate change protesters. The move will be seen as a threat to banks which have exclusive access to Bank of England payments operations and can make money from acting as intermediaries to other payment providers. The bank's governor said Libra, the digital currency Facebook unveiled earlier this week, could substantially improve financial inclusion and dramatically lower the cost of domestic and cross-border payments. But he said that he approached the currency with an open mind, not an open door. So it'll be interesting to see if that happens anytime soon.
Okay, so are there companies to watch as trading resumes today?
Yeah, I'd say Monsoon Accessorize, which is a big clothing company here in the UK. They're calling on landlords to approve rent reductions on some of its 258 stores as part of a restructuring of the high street chain. The two chains operate under separate names and are asking for rent cuts on 135 stores after a period of difficult trading. To win support from landlords, the company is offering them up to £10 million if it trades profitably in the future. No stores are to be closed in those moves. The other piece of news today, Chimmy, is that shares in Dixon's Carphone have plunged after they reported a full-year loss and said its mobile phone arm would make a significant loss this year. The retailer lost £259 million in the year to the 27th of April, compared with a pre-tax profit of £289 million last year. In December, the retailer wrote down the value of its mobile business Carphone Warehouse. One analyst said the division was on life support in an evolving mobile market.
All right, Simon, we'll come back to you much later in the day for update on London markets. Thank you. Well, on that note, we draw the curtain on today's edition of the program. And of course, for the week, thank you for watching. I'm Chimezi Obi Iwagu.